If you're wondering about the difference between day trading and swing trading, specifically overnight, well then this is the video for you. And trust me, the hardest thing to understand in this video is this shirt. In my last video, I showed a chart, which I'll show again in a moment, that demonstrated the difference between trading SPY during the day versus overnight trading. It really shows where the action is. What this chart shows, and I'll make it full frame in a moment, is the difference between buying SPY in the morning and selling at the close, compared to buying at the close and selling in the morning. As you can see, during that time, you would remain flat if you just traded during the day and gained almost 600% if you traded after hours. And I've seen similar studies showing exactly the same thing. So yes, the real action is overnight. However, this graph doesn't demonstrate the real difference between a true day trader and SPY T trading. Day traders navigate the ups and downs of the market, trading against market makers and automated AI platforms. It's certainly possible, but it's definitely not easy. Honestly, I'm in awe of successful day traders because they have a plan, they understand their setups, and they have the discipline to follow through. The second thing that this graph does not show as it relates to SPY T trading is the fact that we're not just going one direction. We don't buy SPY stock at the close and then sell it in the morning. We're using indicators, giving us an idea of what direction it might open in the morning. So we'll buy a call or a put and then sell that in the morning. I'm not saying SPY T trading is easy. However, I personally believe it's a lot easier than day trading. Plus, we have emotions more in check and we have math behind us, especially if we have a good indicator. Especially if you have an indicator that's, say, 60, 70, or 80% correct. So yes, like day traders, we do use indicators, but we only need them once when we buy our calls and puts at the end of the trading day. And we don't need them again until we sell, which would be a different set of indicators to let us know if we stay in our position or get out immediately. And as we know, when we're day trading, we're stuck in front of the screen for hours, if not the entire day. There are many more trades to be made during the day, and of course, many more opportunities to make mistakes. I'm certainly not suggesting I don't make mistakes. However, most of those mistakes come when I'm selling in the morning. And seriously, my biggest losses have come from trying to day trade my way out of small mistakes. However, there is one big disadvantage that overnight swing traders have compared to day traders. Day traders can use stop losses to protect their gains or minimize their losses. Overnight swing traders, we are subject to the whims of the overnight market. And of course, this is why we like our SPY T trades, because they include the 2-to-1 option ratio, placing a protective call or a protective put in case our indicator is wrong or the mood of the market just changes. And of course, if this is all new to you, I highly recommend that you paper trade for a couple weeks first to make sure you get down the skills needed for these overnight swing trades. And I highly recommend that you start small. And don't judge your success or failure based on your day-to-day trades. Consider a series of trades over a week or a month to see the trends over time, and then you'll have a better idea if overnight swing trading is right for you. I'll see you in the next video.